Everybody, I want to welcome you to February. I want to start with the overview of the 5 points of the markets. And then I also want to talk a little bit about what seasonality looks like as we head into this month. This is the first full week of February. And so I want to talk real quick about stocks, bonds, currencies, commodities, and crypto. And I'm going to show you what we looked at last month, which was really only a couple weeks ago, and where we are right now going forward. So let's start off with the S&P 500, SPY. This is the S&P 500 depository receipts, or the ETF for the SPY. And as you can see, looking back, we were looking at our swing low, which was at 410. We were looking at our swing high, which is at 484. And then we saw some areas where we could possibly see pullbacks, but we also laid the trend on top of this, and we also laid implied volatility on top of this. And everything really amounted to higher highs for SPY. We were looking at that 500 to 510 target going out. It was going out into the first quarter of this year. So how are we as we moved out of January and moved into February? How are we looking? Okay, so here's an updated chart for today. An updated chart for today still shows that low at 410. It still shows that now the high has been moving. The high used to be 484. We're now at we're bouncing off of 494 and currently trading around 492 and change. We are 8 points away from our target. So it is definitely moving in the right direction. However, it's gotten a lot tighter here as we move forward. I'm going to tell you my thoughts on where I think a lot of this is going to need to go here. And why. But I would say right now in the next 2 weeks, all right, I expect these targets should hit in the next week or two, because something's going to happen starting around the middle to the end of next week. So I'm expecting we get some final moves higher. And so that I see with the S&P. Take a look at the bond market. So last month we were looking at bonds, and bonds were moving up off of those lows at 82. This is TLT. We hit a high of 100.5, and that was back at the end of last year. Since then, we had pulled back into an area that we thought was going to hold somewhere around the 92-ish area. Mid price was 91.65. We're looking for a target of on TLT of 105. So what's happened since January? Well, since January, we did get a bump up, and we ran up to about 98. We came right back down, and then we're getting a bounce off of the low here. So this is a double dip into the 38% retracement, right? A double dip into 38% retracement. And so you can see here, volatility still low. That's actually good. But as volatility rises high, that also means a higher move for TLT. So we still like the target of 100 to 105 on TLT. All right, let's take a look at UUP. This UUP is the Power Shares Double Dollar Index. This is the cash market. And so if you take a look at the cash market, cash moves inverse of bonds. So when you see bond prices going up, that means yields are going down. But now as yields go up, cash goes down. When cash is strong, when yields go higher. Cash is weak when yields go lower. And we saw the cash market drop off hard from a high of 30 down to 26.95. Now, our idea was that we thought this might come up to around maybe the 38% retracement before peeling off to a potentially lower target. Let's see where that's gone. That's exactly what's happened so far. We've come up to that 38% retracement. That retracement is hit. Let's see if this can turn and move lower. That is UUP. I'm not a big fan of trading UUP, but I use it as a tracking device. So first commodity, USO. This is United States oil. Now, back in January, we just saw this constant move where we were seeing lower highs and lower lows, 82.90, 64.25. We're looking at a mid price of 73.50. We didn't come anywhere close to there. We got up to 71.37, drop back down. We were moving higher as we approached the end of January. We're looking for that target down there in the low 60s. Let's see what's happened since then. So USO has rolled back down, got down to as low as 68, trading back around $68.38 today. We still like that low 60 area for a target, but it's going to happen fast, folks, because something happens in February. About every year from mid-February to mid-July, we get that pile in, that demand comes into oil. It's a seasonality move. And we're going to talk about that more next week. In fact, I might do a special session on that. But until then, just keep in mind that oil, USO, tends to go higher from mid-February to mid-July. It's a 5-month pattern. Yeah, we'll see some movement in between. But there may be a great buying opportunity that's going to happen here in the weeks to come. Gold is our other commodity we look at. And gold did the opposite. 168. 192. We were looking for a mid pullback to around 180. We saw some really interesting areas of support around 185. Right? We're looking for a longer term target at 200. What's happened since then? Well, we did pull back to 185. Just not once, but twice. We're bouncing off that now. 188.69 is the last print that I have. We've tightened up our support resistance now just in the last the last month or so. And you can see here that we've got resistance now at 191. That's the last multi-week highs we've seen. Multi-week support's just below 185. So, kind of coiling up, getting thinner and thinner here on GLD. Bitcoin, and I can't stop talking about the broad market without adding Bitcoin on here. We had a longer term chart where we saw support at 40,000. We saw that support line 2 at 32, and that big old target we're looking at, which is 52. Highs were around 48,000. That was just after the SEC approved spot ETFs now for Bitcoin to trade. Since then, we've seen a sell-off, but where's it been in the last couple of weeks? Let's take a look. Well, it came all the way down to 38,687, which was the 38% Fibonacci range. We see support at 38.6. Resistance right now is at 44,000, which is really kind of like the last couple weeks high. We get above 44, and then we're looking at 48, and then our target of 52. So that's what we're watching on BTC. The money calendar. So what does February tell us? February tells us that we kind of go in like a lion, or in like a bull, out like a bear. So in like a bull, all the way to Valentine's Day, the 14th. Then afterwards, we start to see more and more patterns that start in February that actually end lower, meaning that, take a look at, for instance, the 21st, you can see there's 59 total trades. 17 of those are bullish, but 42 are bearish. And again, this is based on 90% or greater accuracy. So what do we see today on February 6th? Well, looking at the month and ranking this by trend or power meter as we do, I have everything up here, but what I did was I blew up the top 10. So our top 10 starts with Toyota Motor, which is a bearish money calendar trade. There you can see 26 days on that one. But then we go to Ulta Beauty, NVIDIA, KLAC, John Deere, and Synaptics, and those 5 are all bulls. It's interesting, however, that they actually are very short trades when you compare them to those 30 days, give or take, that we're typically looking at. All right, NetEase is a 17-day trading day bear, followed by Anthem, PanW, and LMT, Lockheed Martin, with a 19-day bullish opportunity. All right, so there you go when it comes to what we're looking at on the overview and what we see as seasonality, which is a bit of a shift from mostly bullish opportunities in February to starting to turn into the bearish camp.